Okay, let's unpack this. Imagine a world, right, where some of the really big names in digital assets seem to be, well, losing investor funds, bleeding almost.
Yeah, while others are just quietly stacking up some pretty significant wins.
Exactly. And that's a fascinating puzzle we're seeing in the latest market reports. It's definitely a compelling mystery if you're interested in digital finance.
Absolutely.
So this deep dive is all about those dramatic shifts in digital asset investment products. We're focusing on recent investor movements and, what they actually signify.
Hmm.
Our mission today: cut through the noise, give you the important stuff, the nuggets of knowledge from the latest analyses.
And help you understand not just what's happening, but maybe why it matters to you.
Precisely. Okay, so let's set the scene first. There's some broader context here because the market has been, well, a real study in contrasts lately.
Definitely seeing that.
On the surface, digital asset investment products saw a collective outflow. About $352 million last week. That's as of September 9th, 2025. Which sounds like a fair bit of caution setting in.
It does, yeah. And what's really intriguing is this caution popped up, even though the macroeconomic backdrop seemed kind of supportive. We'd just seen softer U.S. payrolls data, growing expectations for a September rate cut.
Things you'd think might encourage a bit more risk-on behavior.
Exactly. But instead, we saw caution. And adding to that picture, trading volumes tumbled pretty significantly too, down 27% week over week.
Oof. That signals a real cooling off of short-term interest, doesn't it?
It really does.
Uh,
But there's a twist, right?
There is. And this is what's truly fascinating, maybe a bit counterintuitive when you first hear it. Despite those weekly outflows you mentioned,
Yeah.
the year-to-date inflows into digital asset products, they still climb to a, well, pretty impressive $35.2 billion.
$35.2 billion. Okay.
Yeah. And if you annualize that number, it actually outpaces last year's total, the $48.5 billion, by about
Right.
4.2%.
Wow. So year-to-date is actually stronger than last year, even with this recent dip. Exactly. And CoinShares, which is one of the key sources we're looking at, they highlight this. They see it as a clear sign that the broader positive sentiment, that long-term conviction, it's actually still remarkably intact.
Okay, that puts a different spin on it.
It really does.
Yeah.
So the question that kind of jumps out for us and for you listening is,
Yeah.
are we just looking at a temporary blip here? Maybe a natural cooling off after a strong run.
Or is it something more significant, something happening underneath the surface that might, redefine how investors are approaching these assets?
Precisely. It feels like investors are being maybe more discerning, perhaps cautious, yes, but not totally disengaging.
Right. That difference between short-term caution and long-term conviction seems absolutely key here.
Mm-hmm.
And this is where it gets really interesting. Because while the overall market sentiment kind of weakened, one asset truly bore the brunt of it all.
Ethereum.
Ethereum,
Yeah.
yeah. It posted a staggering $912 million in net outflows last week.
900 million. That's
Yeah.
huge.
It's huge. And listen to it wasn't just like a one-off bad day. Withdrawals were logged every single day of that 7-day trading stretch.
Every day.
Oh, yeah.
Wow. So consistent selling pressure.
Consistent pressure, yeah. And these outflows came from a whole range of ETP providers, exchange-traded products, so it shows a pretty broad-based shift.
Not just one big player getting out.
No. And they were so significant, these outflows, that they ultimately erased all the monthly inflows for Ethereum, just wiped them out.
That's quite a reversal for such a major player.
It really is. But, we need perspective here, too. Despite this really dramatic week,
Yeah.
Ethereum still holds an impressive $11.2 billion in year-to-date inflows.
Okay, so still positive overall for the year by a long shot.
Undeniably showing that underlying long-term strength is still there despite the weekly hit.
Right. And if we connect this Ethereum situation to the bigger picture, it's especially striking when you think about Bitcoin's performance during that exact same period.
Ah, good point. How did Bitcoin fare?
Well, while Ethereum was facing these, significant headwinds, Bitcoin actually managed to record strong results. It saw net inflows of $524 million.
$500 million, and while Ethereum lost almost $1 billion.
Exactly. It shows a really stark divergence in investor behavior, doesn't it? It's not just a simple market ebb and flow. It highlights very different sentiment at play for these two leading digital assets. You mentioned the overall market caution, but also the year-to-date strength for Ethereum. How do you kind of square that circle for our listeners, this idea that Bitcoin's pulling money in, while Ethereum, another giant, is seeing such a dramatic outflow?
That's a great question, and I think it really gets to the heart of understanding maybe institutional psychology in this space.
Hmm.
It suggests that while there's still a general appetite for digital assets overall, investors, especially maybe the bigger institutional ones, are getting more selective.
Picking their spots more carefully.
Yeah, exactly. Especially when things feel uncertain. Bitcoin, it has the longer track record. It's got the perceived role as digital gold.
The flight to perceived safety within the crypto space itself.
Right. It often acts like that safer play within the digital asset world when the broader macro picture gets jittery. Ethereum, though, despite all its innovation, maybe it's being treated differently right now.
Interesting.
But it's not all about outflows. That's important to stress, too.
No, definitely not.
Because some other altcoins, they're posting some really encouraging numbers. It shows investor faith in certain select assets is still incredibly strong, thriving even.
Suggests a more nuanced approach than just a full retreat, right?
Totally. Take Solana, for instance.
Mm.
SOL has had this incredible streak, 21 consecutive weeks of inflows.
21 weeks straight. Wow.
Yeah, totaling a remarkable $1.16 billion. That kind of consistency is just hard to ignore.
Really speaks volumes.
And XRP isn't far behind, actually leads slightly, I think, $1.22 billion in total inflows.
Okay, so real conviction in those two specifically.
Definitely seems like it. And we also saw some smaller but still notable inflows for other. Chainlink attracted about $1 million. Sui brought in $0.6 million. Kronos got $0.3 million. Even those multi-asset products, the ones that offer diversified exposure.
Yeah, the basket approach.
They welcomed $4.4 million in weekly inflows, too. So, yeah, while some assets are seeing money flow out, others are clearly drawing significant new interest.
What's really compelling about those altcoin flows, I think, is that they paint this picture of highly selective investments.
Selective is the word.
It really suggests that while the broader market might be, say, de-risking from Ethereum specifically right now,
Yeah.
investors aren't just abandoning the altcoin space entirely. Not at all. Instead, they seem to be gravitating towards specific projects. Maybe ones that offer unique utility or show really strong developer activity, or perhaps they attract a different kind of investor, one that's less sensitive to the same macro anxieties impacting Ethereum.
That makes sense. Different projects, different risk profiles, different investor bases.
Exactly. So for you listening, it means understanding that the digital asset market isn't just one single thing. It's really a collection of diverse ecosystems, right?
Wow.
Each with its own drivers, its own appeal.
Really highlights the importance of looking beyond just Bitcoin and Ethereum to see where conviction is truly building.
Couldn't agree more.
That's a fantastic point, a real testament to how this market keeps evolving. And, these flows weren't just diverse across different assets, they were also highly polarized across regions during the week.
The geographical split, always interesting.
Yeah, geographically, we saw some very distinct patterns. It paints this kind of global patchwork of sentiment. The United States, for example, topped the outflow charts, a hefty $440 million heading out from U.S. product.
Okay, so the U.S. was leading the outflows.
Yeah, joined by Sweden, which saw about $13.5 million leave, and Switzerland with $2.7 million in outflows.
Right.
But it wasn't all heading for the exits. Germany countered that significantly. Big inflows there, $85.1 million.
85 million in. That shows a very different mood in Germany.
Completely different. Hong Kong also attracted capital, about $8.1 million. And we saw smaller but still positive inflows elsewhere, too. Canada pulled in $4.1 million.
Okay.
Brazil saw $3.5 million come in, and Australia added $2.1 million.
So it really is a global patchwork, isn't it? It suggests that maybe local regulatory environments or different investor risk appetites driven by regional economic factors.
Or even specific market events within those regions.
Exactly. They're creating these very distinct narratives. It's not one single global trend.
Yeah.
So for you, the listener, it means understanding that while we often talk about the digital asset market as this one big thing,
It's crucial to remember it's a sum of many parts, influenced by local nuances, local investor behaviors.
precisely, an outflow from one region might be totally balanced by an inflow somewhere else. It reflects a decentralized market, both in its tech and apparently in its capital flows too.
Well said. So we've kind of dissected the global movements, the contrasting stories from different regions. It's clear you really need to dig into the data from various angles to understand these shifts.
Absolutely.
And speaking of reliable data and engaging with the market, maybe this is a good moment to mention, if you're looking to explore digital assets yourself or maybe optimize your trading,
Good point.
consider checking out some of the top platforms. If you haven't already, you can register today on exchanges like BingX and OKX. Doing so gets you a 10% discount on spot and futures commissions.
Nice little saving there.
Yeah. And for even more real-time updates, more insights like these, make sure you subscribe to our Telegram channel.
All the links for BingX, OKX, and the Telegram channel will be right there in the description below.
Perfect. Okay, now let's get back to what these numbers truly signify, especially for an asset like Ethereum, because the big question everyone's asking is, why? Why this significant bleed?
Yeah, that is the critical question, isn't it? Why this huge outflow from Ethereum specifically? Konstantin Anisimov, who's the global CEO of currency.com, he offered a really compelling insight that helps us decode this.
Okay, what did he say?
He stated pretty clearly that he sees these outflows largely as being about rotations, not necessarily a fundamental crack in Ethereum itself.
Rotations, meaning money moving between assets rather than leaving the space entirely.
Exactly. He suggests that this macro anxiety we talked about, fueled by the softer labor data, those broader recession fears, it's pushing institutional money back towards Bitcoin.
Which, as we discussed, is widely seen as the safer digital asset when markets, both traditional and digital, get turbulent.
Right. By contrast, Ethereum, is often seen as a higher beta play.
Higher beta. Can you unpack that a bit?
Sure. Basically what it means, very simply, is that ETH tends to amplify broader market movements. So it might rise more sharply in bull runs.
But it also falls harder or sees bigger outflows when risk appetite shrinks.
Precisely. It makes it inherently more sensitive to these broader economic jitters. So when institutions get nervous, ETH might be one of the first things they trim back.
Okay, that explanation of higher beta really clarifies the why behind a rotation. It distinguishes it from, say, a fundamental problem with Ethereum itself.
That's the argument, yeah.
But while Anisimov makes a strong case for rotation, could these consistent daily outflows, day after day, also hint at something maybe a little deeper, like maybe an unacknowledged erosion of confidence from at least some institutional investors, even if the core tech is still solid? Is there any sign this isn't just rotation, but maybe something a bit more concerning brewing underneath?
That's a very fair and important challenge. You absolutely have to consider all angles. However, Anisimov, in his analysis, is quite clear. He says he does not believe the fundamentals behind Ethereum have cracked.
Okay, so he's standing by the core health.
He is. And he reinforces this by pointing to several positive indicators. Things like staking growth that continues to be robust. DeFi activity on the network, still strong. Overall network health metrics, they look stable.
Right, the engine is still running well, essentially.
Exactly. These are all signals of a vibrant and healthy ecosystem underneath these temporary market jitters. So while the immediate capital flows are definitely concerning if you're watching the daily charts,
Yeah.
the underlying utility, the development within Ethereum's ecosystem, they seem largely unaffected by this short-term tactical reallocation of funds by certain investors.
So it's more about strategic asset allocation in a volatile macro environment.
That seems to be the dominant interpretation, yes.
Yeah.
Rather than a loss of faith in Ethereum's long-term vision or its technology.
Okay. So from this perspective then, the sheer size of this outflow is more about timing and maybe risk management.
Yeah, reacting to the current climate.
It's then a fundamental lack of conviction in Ethereum's future. So what does this imply for its outlook, particularly for, you, the listener, who might be invested or thinking about investing?
Exactly. Well, Anisimov predicts that if ETH stabilizes, and if that broader macro sentiment improves.
Big ifs, maybe, but okay.
Right, big ifs. But if those things happen, we could certainly see inflows bounce back maybe by Q4, which suggests, a potential opportunity for those with a longer-term view.
A potential buying opportunity, perhaps.
Could be interpreted that way. However, he also cautions, importantly, that if this uncertainty persists, these sustained outflows could become a really significant stress test.
A stress test for whom?
For the existing ETF investors and for Ethereum's price resilience itself. It just shows how much the broader economic environment can really influence even the most established digital assets.
So even in this dynamic, fast-moving digital asset market, traditional economic forces still hold considerable sway.
Absolutely. So for long-term holders, maybe it's a period to just observe the fundamentals, stay the course if your conviction holds. For those considering entry, it's about weighing that potential for a rebound against these ongoing macro risks.
A balancing act, as always. Okay, so as we wrap up this deep dive then, it's pretty clear, isn't it? The world of digital asset investments is rarely simple.
Never boring, that's for sure.
No, definitely not. What looks like a dire warning for one asset, like Ethereum's recent outflows, can actually be a story of quiet resilience for Bitcoin, or even, explosive growth for some altcoins.
All playing out against this backdrop of complex macroeconomic forces and really nuanced investor behavior.
Yeah. Headlines grab your attention, right? But understanding the underlying why those rotations we talked about, the fundamental health, the global and regional sentiments, that's where the real knowledge lies.
That's where you can become truly well-informed.
Exactly.
And maybe this raises an important final question for you, the listener, to kind of ponder.
Yeah.
When you look at these market movements, especially these stark divergences we've discussed today,
Yeah.
what do you believe is truly driving long-term value in the digital asset space?
Yeah.
Is it the short-term market sentiment, the macroeconomic shifts that seem so powerful right now?
Or is it the enduring technological utility, the fundamental health of the underlying projects themselves? Something to think about.
Definitely something to mull over.
Well, we really hope this deep dive has given you some valuable insights, maybe a clearer picture of these complex market dynamics.
Hope it helped cut through some of the noise.
Yeah. And if you enjoyed this exploration, please make sure to subscribe to our channel. Give us a like if you found it useful.
And definitely hit that notification
Oh,
button.
yeah. Hit the bell. That way you won't miss any of our future deep dives.
Yeah.
Thanks for joining us.